Good morning, everyone. Thanks for joining me instead of watching the stock screens right now. I know it's addicting. So I'm going to talk mainly about Lumina Gold today, and then a little bit about Luminex just at the end here. So all our projects are in Ecuador between those two companies. So we're advancing the largest primary gold deposit in Ecuador and in South America right now. I'll be making some forward-looking statements today. So the group really is the same group that's been working across all the companies you see behind me from a technical perspective since about early 2003. So the group strategy really is, de-risk, monetize, that's the plan. So there's no intention to build Lumina Gold. It really is, take it along the development track and then look to sell to a large cap major that's wanting to develop it. So across all these companies, our group raised about $300 million and has returned about $1.6 billion to shareholders. So where we are now, Cangrejos is a top 15 global gold development project. We did a PEA in 2018 on our old resource, so that was about 8.8 million ounces of gold in the ground. That was a 16-year mine life, almost 400,000 ounces of production a year, and just under $600 an ounce all-in sustaining cash costs when you net off the copper byproducts. We drilled through 2018 and 2019, and that allowed us to double the resource. So right now we're sitting at almost 17 million ounces of gold and 2.2 billion pounds of copper. So that makes it the 38th largest primary gold deposit in the world right now. Reasons to buy, and it's fairly cheap. It's $8 an ounce in the ground. If you put in $1,500 gold into the model and $2.75 copper, it's about a $1.3 billion NPV right now for the project. So there's a lot of torque to this project. For every $100 an ounce and the gold price goes up, you get about an extra $230 million US of value for the project. So basically our market cap right now. Upcoming milestones, we're just updating the mine plan this quarter for the new resource to bring all those extra ounces into a mine plan, and then we'll be putting a new PEA out in Q2 this year, so probably May, but possibly June. Where the project is, we're down in southwest Ecuador by Machala. So the nice thing about this project is, unlike a lot of the big porphyries you see, you're by the coast, you're by infrastructure. So on this map here, you can fly into Santa Rosa, be at the site in an hour. You're 40 kilometers from a deep sea port where you could ship your copper concentrates out. We've got hydropower to site, paved roads almost to site. So really all the infrastructure you'd want to build and produce out of a mine there. So our management team's drilled about 50,000 meters at the project, and Newmont had drilled some as well, or in the late 90s, early 2000s. So they left the country when gold was kind of around the $250 an ounce level in the early 2000s. The most common questions we get here on the project is, okay, it's big, how big is it? Well, it's the 38th largest, as I mentioned, primary gold deposit in the world, but it's the 5th largest development asset that's held by a developer. And, we think that's very important when the majors are going to look to replace production and reserves in the mid-2020s. Grade, we're about 0.73 grams per ton gold equivalent, M&I. If you think about it through a copper lens, that's about 0.5% copper equivalent. And there's a lot of projects getting built at those grades right now, and it's higher grade than some of these large milling copper projects that have been built recently, like Cobre and Milligan and those type of projects. So it is a large project. It's an efficiency and scale exercise, and because of the infrastructure, I think that's what's going to allow it to work. CapEx-wise, we're about $830 million to build it. That's capital that is getting deployed in Ecuador right now. So we saw Fruta del Norte get built, around $700 million, and we saw obviously Mirador get built. Those mines are both producing now in Ecuador, so it's an amount of capital that's reasonable and is getting deployed in the country. Stage-wise, we're going to redo a PEA to bring in both deposits at the project, but Cangrejos main is at a PFS level, and then our satellite deposit Gran Bestia that I'll show you is at a PEA level, which is why we're updating the PEA instead of going right to a PFS. Corporate overview right now, we're sitting at about $250 million Canadian market cap. We just raised $9 million Canadian in December. Rossby is the largest shareholder at 20%. Management holds 10%, so altogether about 30% of the company is held by management and insiders. Largest institutional fund that holds us is Route 1 at about 6.5%. So Ecuador, I mean, there's been a lot of obvious positive changes. I know most people have probably been following Lundin Gold and Fruta del Norte, but also, you know, the Chinese have been successful in building the Mirador mine, and both of those are now in production. You know, we've seen a simplification of the tax code, we've seen a reduction in royalty rates, and we've seen really every major copper company in the world, with maybe the exception of Rio Tinto, now come into Ecuador and is exploring actively. So it's a busy country. There's been a bit of a rush since they opened up the concession system in 2016, but lots of positive developments there. This is just how our resources evolved over time. So you can see we've taken it from basically having 0 ounces in 43101 in, I guess, 2016 to up now at the 17 million ounce mark. So the main resource was at 4 million ounces, was a shallower pit at Cangrejos, 400 meters. The 8.8 million ounces was the deeper pit that was used in the PEA. And then the new resource has the expanded Cangrejos numbers, as well as the satellite deposit Gran Bestia, which I'll show you in a sec. So these are the two deposits as it sits now. So you've got Gran Bestia in the top left there, and then you've got Cangrejos Main in the bottom right. You know, these deposits are still open. Almost every hole we drilled at Cangrejos Main ended in mineralization. At Gran Bestia, we stopped drilling on the northwest side because we had to pick a place to cut off for the resource, but there's no reason to think the mineralization doesn't keep going in that direction. So still lots of potential to add ounces here if we want to continue drilling. So this is just a cross section. So the gray pit on the right-hand side is the pit the PEA was done on. The blue line along the bottom is the new resource there. And as you can see in the northwest, that last vertical hole was where we cut off the block model. But you could continue drilling that way. And as I said, you know, no reason to think you wouldn't continue to add a lot of ounces. This is the old PEA summary, and so this came out in 2018. I'll talk a little bit about this and also talk about how we think the new study is going to change when we update it. So, you know, this study envisioned $830 million of CapEx to build a 40,000 ton per day plant, and then $400 million of expansion CapEx that would be funded through cash flow to get to that 80,000 ton per day level. So in the new study that we'll be putting out in Q2 this year, we think we'll keep the throughput the same. So this is about a 16-year mine life. So we expect the mine life to dramatically increase when we do the update, and that's really just keeping the throughput the same, but bringing in all those extra ounces from the resource update. Production scale, you know, 270,000 ounces over the first 5 years, and then going up over 400,000 ounces for the rest of the mine life once you do the expansion. Grade about 0.8 on the gold, 0.12 on the copper for the first 5 years, and then about 0.7 on the gold and 0.11 on the copper for the rest of the life of mine. Costs, you know, the costs for this are very attractive at $570 an ounce AISC. There's a bunch of things driving that, but the main things are really a low strip ratio for that pit. It's about 1.1 to 1, so very favorable, you know, strip ratio. You've got the cheap hydropower in Ecuador, so you've got grid power to site, and then obviously being so close to the coast, you know, not much in the way of transportation costs for the concentrate. So a lot of things driving that cost. So at $1,300 gold, this was a 15% IRR project and a $920 million NPV, and that modeled a 5% royalty to the government, which has subsequently been reduced potentially. So you would do a negotiation with the government upon finishing a PFS, and now that could be 3% at the low end, so that would add about $80 million of value to this project if you were to get the lower royalty rate. So this is a chart that shows every project in the world that can produce, primary gold project that can produce over 250,000 ounces a year. So you can see Cangrejos is about the 14th largest there. There's only about 32 projects out there that can do that. And I think if you start looking at the ones that are larger, to the left of Cangrejos, there's some fairly large CapEx bills associated with that. We think we've got a buildable project here at under $1 billion of CapEx, whereas some of the ones to the left might have $5-6 billion CapEx builds and aren't getting built in this type of environment in our view. So this is key when we go to eventually monetize the project and majors are looking for the reserve replacement. This is our valuation on ounces in the ground right now. So we're at about $8 a gold equivalent ounce in the ground. You see the peer average there is about $50 an ounce. And then obviously we're one of the larger projects that's out there. So, we think that over time, the Ecuador discount that's in a lot of the Ecuadorian stocks, not just ours, will continue to shrink as it proves up as a good mining jurisdiction. And we think, as we see a bit more developer M&A this year, that'll also help reduce the discount that's in the developer space versus the producers. So that's kind of our quick view on valuation and where it'll trend this year. So just in summary on Lumina, since 2018, we've drilled about 40,000 meters. We've doubled the resource at the project again. We think we have a pretty compelling value proposition. Gold's gone up $200 an ounce, roughly $300 an ounce almost now, and the stock's relatively flat. So, there's a lot of value that's been added to this project that you're not seeing yet in the stock, and that's really, I think, where the value proposition is. So just quickly, I'm going to talk about our sister company. This was a spin-out out of Lumina Gold. These all used to be in one company. So this is Luminex Resources. It's got about a $45 million market cap. This is where all the other projects in Ecuador got put into to make Lumina Gold a single-purpose vehicle. So the three kind of key assets in Luminex right now are our Condor project that we're drilling. We have a new high-grade discovery there at the camp zone. We drilled underneath the camp and hit about 40 meters of 5 gram per ton material, so by far and away the best material that had been found at the project so far. That project has a current 4 million ounce resource at it. And then we've also got early stage copper partnerships in this company. So we've got a partnership with BHP working on Tarky, which is a discrete porphyry target, and then a partnership with Anglo American working on our largest land package. It was about 67,000 hectares. So they're looking for clustered copper porphyry targets there. So between the two of them, they'll be deploying, if they go to full earn-ins, about $100 million between 2018 and 2025 to earn into those projects. So a substantial amount of non-dilutive capital being deployed there. But we're spending our money at Condor right now at the camp zone. So this is just a quick overview of some of the drill results we've had there. But it's still early days. We've drilled about 550 meters of strike length there on a 1 kilometer surface anomaly. And we're continuing to work to expand and find new targets, and we've identified quite a few. But you can see the discovery hole here was the 40 meters intercept at 5 grams per ton. We've had a fair amount of success since then. So we're drilling hole 31 right now, and we've released out to hole 25. So the plan at this asset is to put out a maiden resource in March this year, and that'll demonstrate hopefully a high-grade resource at the camp zone that would be a standalone project, and then we'd look at and evaluate how to bring in the other 4 million ounces that are at the project as well. This is just a long section of the camp zone. So the camp sits right on top of this knoll here. So we've drilled down to about 700 meters and about 550 meters along strike. So you see the red is over 2 grams per ton. There's a fair amount of high-grade material there, and this is the area that we'll block out and look to put a maiden resource out in March. So with that, that's the end of the presentation, and I'm happy to take any questions.